Okay, guys, welcome back. And today we have to discuss. You may say like it's unlikely to be examined, but you have to have some knowledge about these things. It's very important that from today we'll discuss the IFRS foundation and its key bodies. And first, you have to check here that section one on the IFRS foundation is assumed knowledge from for the ISBR exam, and it provides background information. It is unlikely, but what I have already told you, that is unlikely to be examined in detail. But you have to focus on understanding the structure and roles of these bodies. So first we'll take a start from here, that what is IFRS Foundation. So you must have understand that IFRS Foundation is a global not-for-profit organization, and that is established to develop and promote the high quality and transparent comparable financial reporting standard and that are used worldwide. Now, this standard is known as IFRS, and we call that is IFRS International Financial Reporting Standard. And these IFRS, help companies prepare the financial statement that investors, regulators, and others can trust and compare across countries. So, if you see here, IFRS Foundation is a not-for-profit in a public interest organization, and it develops a high quality, understandable, and enforceable and globally acceptable IFRS standard that include both accounting and sustainability, and it also promotes and facilitates global adoption of these standards. So what we have to understand, that the purpose of this IFRS Foundation is to create a single set of global accounting standard, and that will ensure three things. The first one is transparency. By transparency, we mean that financial statements are clear and honest. The second thing, it will ensure the comparability. And by this, we mean that investor can compare the companies across borders. And the third thing will be your consistencies. And this means that rules are applied uniformly, worldwide. So this is the purpose of this IFRS Foundation. Clear? I think you have understand. But let me give you an example. For example, imagine you have two companies. One is in Japan and one in, let's say, in Brazil. So here this is the Japan and this is the Brazil. Now, if both use IFRS, both of them are using IFRS. So an investor in the US can, let's say, here is your investor in the US. So it will be easy for the investor in the US to easily compare the financial performance, because both are following the IFRS. So both are following the same accounting standard, and that will help the user and the investor in the US. So this is the key thing that you have to understand, that what is IFRS Foundation. We have understand that this is not-for-profit, and this is a public interest organization. The purpose is to develop a high quality, understandable, and enforceable and globally accepted IFRS. And these IFRS help to give the transparency, comparability, and consistency when you are preparing the financial statement, and this will help the user. And the IFRS Foundation also promote and facilitate the global adoption of these standards. Okay. Now you have understand the IFRS Foundation. Now let's move on. We have some key bodies of the IFRS Foundation. Okay, here. Now, if you see here, we have some key bodies of the IFRS Foundation. The first one is your, I'll start from here, the IFRS Foundation Trustee. And this Foundation Trustee is, these are the governing body. This is the governing the IFRS Foundation. So, oversee and governing the IFRS Foundation. This means that the role of IFRS Foundation Trustee is they are governing body. They are governing body of the IFRS Foundation. Clear? And they oversee the organizational strategy. They also appoint members to other bodies, and it will also ensure funding and promote adoption of IFRS globally. So you have understand that IFRS Foundation Trustee is the governing body of the IFRS Foundation, And this IFRS Foundation trustee oversee the organizational strategies, appoints member to other bodies, and ensuring funding and facilitate or promote the adoption of the IFRS globally. So the key task with the IFRS Foundation trustee is they act like the board of directors, ensuring that the foundation, that what is the purpose of the board of directors? The board of directors ensuring that the foundation or whatever the organization is operate independently and in the public interest. So it's actually act like a board of director, and that's give the insurance of the independency and of the organization, and also ensure that they are working or operating in the best interest of public. Clear? So, for example, the trustee might approve a budget to fund research for the new IFRS standard, or appoint an expert to the other bodies like the International Accounting Standard Board, International Accounting Standard Board. So the members appointed to this board by the IFRS Foundation trustee. Clear? Now let's move on to the other body, that is the monitoring boards. And monitoring board is actually a group of capital market authorities, and they link the IFRS Foundation trustee with the public authority. So if you see here, the monitoring board include representative from the organization like the US Security and Exchange Commission, and or you may say like from the European Securities and Market Authorities. So the representative of these bodies or from this organization are included in this board of directors, and these capital market authorities ensure that the IFRS Foundation, this organization, is work aligned with the public interest. They're working in the public interest, and by how they can do this, by providing oversight and communicating with the IFRS Foundation trustee. So they are give oversight about this one by communicating with the IFRS Foundation trustee, that is the governing body of the IFRS Foundation, and about what? About the global financial reporting standard, about IFRS. Clear? So you have to understand that the monitoring board is actually the group of capital market authorities, and these include the representative from the different organization like the Security Exchange Commission, or you may say that ESMA, that we call as the European Security and Markets, European Securities and Market Authorities. And these capital market authority ensure that the foundation this IFRS Foundation is aligned with the public interest, and how they provide this insurance, and this by oversighting, by oversight and communicating with the IFRS Foundation trustee with this organization about the global financial reporting standard. Clear? Now let's move on. We have two bodies, that is International Accounting Standard Board, and another one is the International Sustainability Board. So we have another two boards. We have to discuss this in a very detail. In exam, you will be asked the purpose or role or the key task about these organizations, and I will not check, or you may say like asking about the deep knowledge about these boards. But for knowledge, you have to understand these things. So International Accounting Standard Board is set IFRS accounting standard and responsible for developing a global accounting standard. So what we mean by this, we mean that this ISB is actually a standard setting body, right? They are responsible for developing and issuing the IFRS. Okay, and you know that IFRS or standards, international financial reporting standards. Now it actually creates the actual accounting rules, that the companies follow when preparing their financial statement. So the key task here is that the International Accounting Standard Boards conduct research. They are conducting research, consult with the stakeholders like companies, auditors, and publish standards like if you have seen that IFRS 16 about leases, IFRS 15 about revenue, and then this is the final work. So what we have discussed here, that International Accounting Standard Board is actually the standard setting bodies, and this is responsible for developing and issuing the IFRS standard. So this means that International Accounting Standard Board create actual accounting rules, and these rules for the companies, and the companies have to follow these rules when preparing the financial statement. And if they are following these rules, then there will be transparency, there will be comparability, and there will be that is consistency. Now if you see here that the focus of the International Accounting Standard Board is very clear. They are just ensuring that the standards are practical relevant, and improve the financial reporting quality. So the focus of the International Accounting Standard Board is the practicality, the relevancy, and the improvement in the financial reporting quality. For example, if I take the example of the IFRS 16, then you see that International Accounting Standard Board decided companies must report lease asset the office building on their balance sheet, making it clear how much debt a company has from the lease. Okay, so the point here is that the International Accounting Standard Board is working in clarity that the standard they are developing is clear and that relevant for the from the practical perspective, right? Now we have another standard, another board, that is International Sustainability Board. We call that is ISSB, and this is very important nowadays. It's most of the time they are testing in the exam. So the primary body of creating global accounting standard, and the purpose is to develop and update the accounting standard for the financial reporting, that is your IASB. But if you look at here, the International Accounting Standard Sustainability Standard Board, then that is a bit different. This is a set standard for sustainability related disclosure, and the purpose is to develop a standards to report the environmental. Let me erase this stuff. Okay, here. So that's International Accounting Standard Board develop standard and to report the environmental and social impact. For example, if we look at here is the climate risk. So this is the one issue that is addressed with these standards, right? They have different types of standard that has been issued by the International Sustainability Standard Board. And for example, I see right here that is S2, IFRS S2, and that is requiring disclosure of the greenhouse gas emission. So these are different types of body, and we have discussed them one by one. Now here we have some. If you see here, let me show you. Okay, here you see here the what a minute. Okay. Now this one we have already discussed that IFRS Foundation Trust include the experienced professionals like former central bank governors or senior. And so we have done with this. Now let's look at another thing that is international IFRS International Committee. This will be simple. This is equally the interpretation committee. The word represented here. Here you see. So the issue and the IFRS they issue the IFRS interpretation of this complication. Support consistent application of the IFRS accounting standard. Now look at here the advisory council. We have to discuss this. Provide advice to the IFRS Foundation trustees, which is the governing body of the IFRS Foundation, and also to the International Accounting Standard Board and these two standard setting bodies. So mean the purpose of this council is just providing advice to the trustee, IFRS Foundation trustee, and the two International Accounting Standard Boards, right? Now, if you see here from the SBR perspective, so to understand the purpose of the IFRS Foundation, like a global high quality standard, we have discussed them. And now know the rules of each body. You have to understand the rules of each body, like International Accounting Standard Board about accountability, International Sustainability Standard Board, that is about sustainability. So you have to understand the purpose, you have to understand the rules of each body, and that is more than enough. Clear? Okay, let's move on. We have another interesting topic, that is the development of IFRS accounting standard for ACCA SBR exam. And if you see here, the International Accounting Standard Board follow a structured due process to develop and amend IFRS accounting standard, and this ensure transparency, stakeholder input, and high quality standard. Now we have to discuss the International Accounting Standard Board due process. So the International Accounting Standard Board due process is transparent, consultative approach is there to develop or amend the IFRS standard. It involves stakeholders globally to ensure that standards are practical and meet the user needs. Now the steps is here is the first one is, if you see here, is the agenda setting. If you read here, ICCA International Accounting Standard Board identify topics needing new or revised standard based on stakeholder feedback or emerging issue. So this means that International Accounting Standard Board identify issues needing a new or revised standard based on the stakeholder feedback, economic changes, or gaps in the reporting. So they first identify the topic, they identifying the issue that required new or required revised standard, and this is based from the stakeholder feedback, or you may say like emerging issue. By this we mean that economic changes, economic changes, or you may say gaps in reporting. Clear? So the key task here is to consult the IFRS Advisory Council. We have discussed this. Regulators, the other stakeholder, and the user to prioritize the topics, publish an agenda consultation every 5 years, right? For example, deciding to develop IFRS 15 revenue from contract with a customer due to inconsistent revenue recognition practice, and the new model, the new standard give the 5-step model for the revenue recognition. Now the second phase is after setting agenda or agenda setting, you have another topic, another step, and that is the research step. So in the research phase, the conduct studies to understand the issues and gather evidence. So they are actually understanding the issues which have been identified and the agenda setting. And after that, you have to gather information or evidences. So this means that International Accounting Standards Board gather evidences to understand the issue and potential solutions. The task here will be, publish discussion papers, conduct outreach with investor and preparer, and analyzing the existing practices. So, for example, researching lease accounting issue, a later discussion paper before developing the IFRS, that is, I think, I-16 leases, right? After doing this, you will move to another step, that is discussion, that we call it the discussion paper. And I have told you that the published discussion papers, after when you're doing the research, then publishes a preliminary documents to outline the issue and seek public feedback. So you are actually issuing the paper for discussion, and after that you have to move on to another step, and that is the exposure drop. And this releases a drop of the proposed standard for the public comment. By this we mean that the International Accounting Standard Board drops a proposed standard and seek public feedback. Here you have to publish the exposure draft that we call ED, with a comment period usually 1-3 days. Stakeholders like companies and auditor provide input, and after that you have to deliberation that will review the feedback and refine the standard, right? So the International Accounting Standard Board review the feedback from the exposure draft and refine the draft standard, right? Now that's they hold a public meeting to discuss comments, adjust proposal, and re-exposes the draft if significant changes are needed. For example, feedback on the IFRS 16 leases definition led to clear guidance identifying the leases. After the deliberation, you have to move on to another step, that is card issuance. So publish the final IFRS accounting standard. By this, the International Accounting Standard Board finalize and publish the standard, including its effective date and transition guidance, and they ensure that the standard is clear, practical, and enforceable, which is the main purpose of the IFRS, what we call it, IFRS Foundation, and publishes basis for the conclusion to explain the decision. For example, if there's a standard as IFRS 17 insurance contract that was I think issued in 2017 with the with the 2023 effective date after the extensive consultation. Okay, you understand what I'm actually trying to say. Now, after doing this, you will have the post-implementation review, that is PIR, and this is actually a review conducted after the new IFRS standard has been mandatory for 2 years. So when the new standard is issued, that is mandatory for the 2 years. So a review conducted after a new IFRS standard has been mandatory. So by this we mean that the International Accounting Standard Board assess the standard effectiveness after implementation and see that the post-implementation review, the PIR section, in detail you discussed it. That the role of the post-implementation review is, if you see here the purpose, is to check if the standards objectives are met, assess if the requirement work is intended, to identify any implementation issues, and may lead to amendment improve the standard. So these are the purposes of the post-implementation review. So this means that the post-implementation review actually evaluate whether a standard achieved its objective. The first thing is applied consistently. That's looking about it consistently, that what we have actually intended, and has unintended consequences. So first, what they have to do, they actually doing is collect the feedback from the preparers, auditors, different types of stakeholders like investor and regulator through surveys, through surveys or outreach, and identify the issues. Identify the issues like unclear guidance or inconsistency or inconsistent application. Then recommend amendment. They go for amendment, or you may say clarification, and that will help to improve the standard. Clear? So if I give the example, now of course you have to see here we have example. First we check it here. After IFRS 15, from the contract with a customer became mandatory, the International Accounting Standard Board conduct the PIR and review whether the company correctly applied the 5-step revenue recognition model. And if the standard provided useful information, investor feedback show some industries struggle with the complication contract, leading to minor clarification or amendment to the standard. So if I give you another example, that is, for example, the post implementation review that we call as PIR, the IFRS 15 identified challenges in applying the principle, was agent guidance, leading to interpretative clarification by the IFRS Interpretation Committee. And there was a problem there. What we consider the principle and agent. If you have read the F4 paper, then there is a concept in the law that what we call agent and what we call principal. So when contracting with the principal, there is something different. If you're contracting with the agent, then it's something different. If agent is working for the principal, then they will just charge the commissions. That will be the revenue for, and the remaining amount will goes to the principal. This is actually the concept. I have just give the flavor, right? So you have to understand that the step IASB due process from agenda setting to the issuance. You have to understand this. Now you have to understand or know the rules of the internet post implementation review and assessing and defining standard. You have to be explain how the process ensure that quality and consistency of the IFRS standard. So this is actually we have discussed that how the process. I will just explain this for your exam purpose. That how the process ensure quality and consistency in the IFRS standard. So we know that International Accounting Standard Board due process ensure that the IFRS standards are high quality and consistent, and through what? Through your transparency. Transparency. By this we mean that all meetings are public, and documents like the exposure drops and the feedback summaries are openly available. So that means that there is transparency. For example, you know that IFRS 16 development process include public webcast and comment letter publication. The second purpose that give the quality and consistency in the IFRS standard is that stakeholder engagement. Stakeholder engagement, and we have discussed this in a very detail. That stakeholder involves that that are the preparers, the auditors, the investor, the regulator, globally to ensure that the standards are practical and meet user need. And I have given the example that of IFRS 17 that was shared by the feedback from the insurance company to ensure that it reflects the industry practices. The third thing that give the quality and consistency in the IFRS standard, that is rigorous research and testing. So mean they are updating the thing and frequently. So the standards are based on evidence, and the evidence comes from the research, field test, and economic analysis, and ensure that they are robust, they are strong. For example, when we are looking to the IFRS 19, the impairment model was tested with the banks to confirm it reflects expected credit losses accurately. The fourth thing that you have to know, that give assurance that quality and consistency in the IFRS standard, there will be your global consistency. And we have discussed this in a very detail, that International Accounting Standard Board collaborate with the national standard setters. That is, you may know that FASB in other regulators to align the standard and ensure the uniform application. If you look at here with the IFRS 15, when IFRS 15 was developed jointly with the FASB to harmonize the revenue recognition globally. Okay. After that, I will give you the fifth point here is that due to the quality and consistency and the IFRS standard, there will be the continuous improvement. And this is through DIR. We have discussed that this process, what we call this is the due process of the standard setting, and we have discussed that DIR in a very detail, that is they identify and resolve issues post implementation, and ensuring the standards remain effective and consistent. We have discussed that PIR feedback on the IFRS 13 that is related to the fair value measurement and improve the disclosure for the fair value hierarchy. Whereas we discussed these thing that what is the IFRS 13 about fair value measurement. There are some steps, there are some hierarchy. We'll discuss them in detail. And the last I will write here. Let me here. The point number set that is independence. Independent oversight. By independent oversight, we mean that IFRS Foundation trustee and monitoring bodies ensure that International Accounting Standard Board follow due process and act in the public interest. And we have already discussed these two bodies. The first one is monitoring board. The second one was IFRS Foundation trustee. And these two bodies ensuring that International Accounting Standard Board and International Sustainability Board are working in the big public interest, the best interest of the public, and they are overseeing the activity that they are affecting. They are working or operating effectively, and they are working in the best interest of the public. So the monitoring board reviewed the IFRS 17 that we have discussed, that a process to confirm that stakeholder concern were addressed. They are checking that when they are developing the standard, they have addressed the issue of or the concern of the stakeholder. So these, I think, give the the assurance that the IFRS standards are qualitative and there is consistency, right? Okay, let's move on. Let me erase these things. Okay, now we have to discuss the use of IFRS Accounting Standard in ACCA SBR exam. So the IFRS Accounting Standards, there's no need for just to go to reading. IFRS Accounting Standards are widely adopted by large multinational companies to meet investor needs in a global financial market. It is simple. They are simple. English you have to understand. They ensure consistency and transparency. We discuss all these things. Global adaptation about there's some 150 countries format for require IFRS standards. It's about the usage or acceptability of the IFRS standards. Then use in various ways. They're talking about their national requirements. Some are adopted directly as a local standard. Is a basis for national standards. Some are adopted. They are just amended or you can say modified, adapted to the local needs. They just they ask saying about the modification of the standard as per the local need. And then international benchmark for country developing their own rules by regularity and so on like that. Now, if you see here, example, a multinational company like Unilever operating in multiple countries uses IFRS standard to prepare its financial statement. Now, this ensures that its reports are consistent and comparable for investor in a market like UK, USA, and Asia. And the reason is that Unilever, let's say this is Unilever, and Unilever working in Pakistan, working in India, working in USA. So these all are using the same rule that is called IFRS. So when investor in Sri Lanka, then this investor will not confuse because they will easily compare the different financial statement from the different countries like from Pakistan, India, or previous. And this is the reason. This is the reason that you ensures the IFRS Foundation give the assurance that the standard will give transparent, will give consistent and comparable value to the user. So the investor now, for instance, Unilever apply IFRS 16 leases to report its lease obligation uniformly, making it easier to raise funds on global stock exchange because the stakeholder will easily understand the report. They will compare the report, and that will be easy for the Unilever to raise their fund or to sell their when they are raising their fund to stock exchange. Then it will be easy for them because the user or the investor will easily understand the comparabilities and the consistency and the financial statements. Okay, now let's move on. We have if you see here there are standards, IFRS standard, practical to global consistency in financial. Now you have to understand it. Now recent IFRS, these are the things you have to look at by yourself. Now let's move on. We have to discuss a very interesting topic, and that is first you have to check over here that exam advice is that focus on IFRS 15, IFRS 9, IFRS 16 is they are key standard effective within the last 5 years. So you have to understand all these three standards in very detailed knowledge. You have to understand. You have the ability to explain. They asking for issue. Understand their purpose. You have to understand the purpose of these. Understand the changes and impact on the financial reporting. And this is a very important. So you have to understand three things. The first one is the purpose of the standard. The second thing is the changes and the standards, the old standard and to the new, and their impact on the financial reporting. The main purpose is financial. These standards are developed for the financial reporting purpose. So we will discuss one by one. First, we have to take the example of you can see here the IFRS 15 revenue from contract to the customer. So before that standard was International Accounting Standard 11 construction contract and IAS 18. These are the two standards, 11 and 18, and this was now replaced by the IFRS 15. Clear? Why introduce IFRS 15? Because the old standard allowed inconsistent revenue reporting. There was inconsistency in the reporting of the revenue. So for that purpose, the IFRS 15 was introduced. Clear? Hope you guys are getting what actually I'm telling you. Okay. And now, what are the key changes? If you're looking at here, the key changes that is introduced 5-step model in IFRS 15 for recognizing revenue, ensure consistency. So before the before standard, that was IS International Standard 11 about construction contract, and the 18 IS 18 revenue that allowed inconsistency and revenue reporting. That was fixed. That was settled by the key changes that was introduced in the IFRS 15 with a new standard as 5-step model, and how you have to recognize the revenue. Then development, if you look at it here, that was developed, it took about 3 years due to the concern about the initial proposal. For example, a telecom company, IFRS 15, to recognize revenue from the phone contract over the time based on when the services are provided and not when the cash is received, right? Now let's move on. We will discuss all these standards in detail, but this is just a flavor that why these standard was introduced and why they are very important for your studies. Now IFRS 9, that is related to financial instrument, that was replaces the part of the international accounting standard that is IAS 39 financial instrument. Why this was introduced? The purpose was to simplify and standardize the accounting for the financial asset and liability. And this standard is very important. Revenue standard is also very important from the exam perspective. Now the key changes in this standard was use a single classification approach for the financial asset with the rules for the impairment, expected credit loss. We discuss all these things, and hedging accounting. These things we will discuss in a bit detail. And this took about 5 years due to debates on how to count a complex instrument. A bank applies IFRS 9 to classify a loan as amortized cost and recognize expected credit loss always. So that's improving the transparency for the investor. Issue may arise as companies implement the new rules. We'll discuss these things in detail when we move to the issue standard. Now IFRS 16, that is about lease, and this was the replacement of the IS 17 about lease. And why this standard was introduced? Because to improve the transparency. And the purpose of the replacement is just go for the transparency. We're looking for the comparability, and we're looking for the consistency. So this standard was introduced in replacement of the international accounting standard, that is IS 17, and this was introduced to improve the transparency and lease accounting. The key changes were, there's leases required to recognize most leases on the balance sheet is a right of use asset and lease liability, while the lease accounting remain, unchanged. This is largely the same as that of the IS 17. Okay. This took about 6 years. That was from 2010 due to the resistance from the accounting professions. For example, a retailer leasing a store must now regard the lease as a liability and asset under the IFRS 16, ensuring the true extent of its obligation. Okay, guys, for today, this is enough. In the next lecture, we will discuss about the conceptual framework. This is a very interesting and we will say like a very boring because it's completely theoretical. But you may have to understand that SBR is now theoretical paper. You have to discuss the issues with you're the directors or you're the CFO or you are in a high position of the company, and from that perspective you will discuss the issue, you will give the solution, you will resolve all the identified issue in a way that the director or any person that is placed in that chair. So for today this is enough. We shall continue in the next lecture. Thank you for watching.